So with that, the topic of our session is card payments in a multipolar world, navigating regulation, local networks, and cross-border growth. We have a fundamental and a phenomenal set of speakers and moderator here for this particular session. Let me first invite on stage our moderator, Mr. Fadi AlAwami, Deputy Vice President, M2P Fintech. A very, very warm welcome to you. Let us, yes. Thank you so much. You're most welcome. Thank you for gracing us with your presence and sparing your time here for us. Up next, we have a wonderful curation of brilliant speakers. Let's ensure that our applauses are good enough to welcome Mr. Ajay Rajan, Country Head, Transaction Banking, Yes Bank. Okay, probably he may be joining in a little while. We'll look for that as well. Mr. Ravi Varma Datla, Senior Vice President, Customer Solutions, Mastercard. A very warm welcome to you. Thank you for making out the time to be present here. Let us also continue our applauses for Mr. Ramakrishnan Gopalan, Head of Products and Solutions, India and South Asia, Visa. Thank you so much. A very warm welcome to you as well. And last but not the least, Mr. Romain Zanolo, Managing Director, Payment Services, APAC and India, IDEMIA. A very, very warm welcome to you. We can see the curation, right? The companies they represent, the geographies they represent, and the talent they represent is immense. We'll get to see. So with that, Mr. Awami, leaving the strings of the conversation in your hand and looking forward, we've got around 25 minutes. Let's make the most of it. Let's get our pens out, ready to take notes. Thank you so much.
Hi everyone, and welcome. Thanks for attending this panel discussion today. My name is Fadi AlAwami. I am Deputy Vice President at M2P Fintech, covering Saudi Arabia market. I'm glad that I will be moderating this interesting session, which is about card payments in multipolar world, navigating regulation, local networks, and cross-border growth. We have great experts today to discuss this topic from payment industry. We will discuss that topic in different aspects. We have Mr. Ravi Varma Datla, Senior Vice President, Customer Solutions at Mastercard. Please welcome Mr. Ravi. We have also Mr. Ramakrishnan Gopalan, Head of Products and Solutions, covering India and South Asia area at Visa. We have Mr. Romain Zanolo, General Manager, APAC area at IDEMIA. Thanks for joining us. I will start the discussion today by asking general questions to all panelists. What are the main challenges for card payments globally from your perspective? Please, Mr. Ravi. Mr. Ravi.
Okay, I'll go first. Thank you, Fadi. Good afternoon, everybody. I know we have a big agenda-packed afternoon, so we will keep it quick in this particular session. I think you asked about some of the challenges. To me, working in a world which is getting more and more polarized, I think is one big challenge. Managing geopolitics across markets, considering that Visa and Mastercard here and IDEMIA are all global companies. We do believe that geopolitics now is an increasingly important challenge that we all need to navigate. I think that's number one. Number two for me could be, I think the regulatory landscape is also getting very fragmented. If you look at, even within Asia, the way regulators look at security risk, look at emerging payments with some look at emerging payment opportunities with suspicion, some look at with sense of optimism. So it's a bit of a balance. So fragmented regulations, geopolitics, and I think the third big one probably is evolution of alternative payments. I think those are the three large ones. I mean, if you pick any market like India, a decade back, I think nobody would have imagine the kind of growth of real-time payments that we've had in this country. Similarly, if you look at many Southeast Asian markets, I think that is a staggering growth that we are seeing. So I think three large challenges It's a challenge for local incumbents. It's a challenge for global networks. That's the way I would put it.
Mr. Ravi, please.
Yeah, maybe I'll just add a couple of points to it, right? On the topic of multipolarity, while there is one side that Ramki is very well elaborated on what is the context of business that we are all operating with, there's also another angle of multipolarity that we're all dealing with, right? Today, all of us in our daily lives actually engage in 3 different levels of technology as well, right? We still continue to use web. There are transactions of card networks actually happening on the web. We have things happening on the app, and now we're talking about agents. So that's a different angle. And we still have physical cards, we're doing digital, and we're doing agentic commerce and bunch of things. So for networks, the multipolarity, like Ramki said, is not just about a challenge, also an opportunity for us to transition and play to this complex environment that we're expected to play with.
Thank you.
Well,
Mr. Romain.
I think I had more or less the same in my note, but basically multiplicity of rails, being it in card or competition from alternative rails. So to the point of regulation, you have domestic payment network everywhere, but not all of them are operating exactly the same. Some would be doing co-brand with Visa and Mastercard, others would be restricted to debit, others would be actually doing credit as well. So there's not a single answer and single definition, and that makes it, of course, exciting, but also challenging to find a common ground. Second part on regulation, I was in a panel roundtable on Tuesday where we were saying we don't even have a vocabulary that is common across all countries on what is a payment. Is it when you store value, when you initiate value, when you actually clear the transaction? So there is a regulatory topic which is to have the same definition and actually same potentially regulatory implication on what is a payment. And that has implication on when you launch the like of Google Pay, for example, or things like that. Is it a payment? Is it an initiation of a payment? So this vocabulary in regulatory aspect is the second, I would say, challenge. And the third one is, I think, around technology, but also all the implied fraud aspects that exist. We're all working on a beautiful technology, which is tokenization, but tokenization is not yet everywhere. We're all working towards this goal. So how do we ensure that basically payments are secured, safe? At the end of the day, the cardholders are, they don't care about the rails and what's happening. What they care is about transferring money, paying for goods, and ensuring it's secure. So this is the mission we all need to solve collectively.
Okay, great. I believe these challenges can be converted to opportunities, right? So it's always the improvement in the industry is giving advantage for either local or global networks. Mr. Ramki, my question, this is for you. From your perspective, how do regulatory prioritize vary across countries? And are there core best practices that regulators worldwide could adopt without harming local needs?
Yeah, I think there are a few. A couple of things come to my mind. I think to me, some of the non-negotiable ones, which probably regulators across the world are focusing on, and they can probably do a better job at it, is look at as common security and interoperability standards. I think those are something that there's definitely regulators across markets are now talking more and more. Card networks such as ourselves have built globally interoperable systems for decades now. We just hope and pray that as the new forms of payments evolve, regulators put the yardstick of interoperability with the threshold of safety and security that's needed for payment system growth together. I think that's one massive opportunity and perhaps leap forward in thinking. So commonization of identifying common standards on security and interoperability is one big item. I think the second thing for me could be a good practice as local networks and global networks are, as global networks and local networks learn to coexist with each other, is on participating in global forums and global standards or building in global standards. So for instance, 3DS has been there for nearly multiple decades now. I think even after 3 or 4 decades of 3DS being in existence, it's still very, very relevant. India is a mandated 2-factor authenticated market. a large part of that two-factor authentication happens on 3DS rails. And hence, I think regulators participating in evolving such global standards, 3DS can be one, could be other forms of standards that are there. So interoperability, security, and standardization, the more the regulators start looking at it across the world, I think it'll be great opportunity to connect payment systems across the world and make it relevant for all our consumers.
Interesting. As you mentioned, the regulation side is something that really need to be developing from time to time in order to, let's say, adapt this kind of development in the card payment. Mr. Ravi, how can domestic card systems support local needs while connecting smoothly to global networks?
So the way I see it, right, global networks are the ones who are potentially playing for what I call is minimum viable retail payment, which is accepted, which is consistent across the world, is what the global networks by default deliver. And then there are use cases that the global networks continue to deliver. The local ones, the priorities, and I'll take a couple of examples to start with in India itself, right? If you see the domestic networks are trying to drive the agenda of the government on digitization. So the key objectives for them is to not just stick to the wider retail payments, but also go use case by use case. And for example, maybe in India, how let's say transit has been solved with FASTag, where a very nuanced solution was required for India. And if you look at the kind of opportunities that we've seen in Africa, folks like M-Pesa have done mobile network-based transaction banking using M-Pesa and others. And we've seen similar examples in many parts of the world where very localized nuances have been solved for by the domestic networks. Now, the key part here is to ensure that the local needs are met, but also there is the entire piece of interoperability that needs to be maintained so that the world is connected. Because end of the day, the entire objective of payment networks and payment ecosystem world over is to drive these connections consistently and ensure every consumer, every merchant, everyone has a choice that they would want to pick, and they would be given a seamless access to their choice of funding source or the choice of merchant acceptance.
Okay, thanks for your insight. Mr. Romain, can you also comment on this question?
No, I think I agree overall. The answer is in the balance between both, like local network are solving local needs. On top of that, I think, as my colleague was saying, we cannot ignore the current context. I think payment is a fundamental right. So at the end of the day, a country needs to ensure they have a resilient infrastructure domestically in their country. So domestic network are also addressing this resilience aspect. But then interoperability, ability to connect with the world is needed. And usually that's where the collaboration with the international payment scheme is working extremely well. So completely aligned with your message on this.
Okay, Mr. Ramki, this is a question addressed to you. Now the local card networks also are rising, and they are being active in many countries. So how should the global players respond? I mean, considering them as a threat that need to take action against them, or like a healthy part of each country network system?
Yeah, I think it's a good question. Truth be told, okay, local networks have solved for country-related needs and challenges, some of them. So I think they probably have a nuanced understanding of market requirements and have built solutions, capabilities, processes to support that. So I think if local networks are growing, it's probably because they found a way to address the gaps in the market. So I think first thing, as part of a global network, I think it's important for us that while we maintain our globality and keep security and interoperability as non-negotiable, I think we need to find a way somehow to make sure that we understand local needs. Like for instance, uh, most markets, I think the acceptance of global networks, the local payments start with wider acceptance and coverage typically. They reach out to the masses of the country, they go to the hinterlands and make their payments accepted. I think that's something that global networks need to do, and I think we're doing now, beginning to realize that as a, it takes two hands to clap, and hence, while you issue more and more credentials with banks, you need to drive acceptance with the other side. That's something that a lot of us are doing. I think so. One is learn from local networks. Wherever local networks are doing better, find a way to keep pace with that or even go ahead. I think the second thing is clearly know what is the right to play and right to win. In many cases, because global networks are probably fundamentally operated built as an interoperable network, we need to make sure that we maintain that interoperability very well across markets. So whether it is form factor of cards or phone, whether it is token or tap, whichever transaction we take, we need to maintain that edge on interoperability and build the next set of experience. So A, learn from the local network. B, build on whatever is your core strengths are. So the answer is probably going to be, in some we will probably compete. That's the reality. In some we'll have to collaborate. I don't think, there is, as they say, there's no permanent enemy, there's no permanent friend, right? It's a bit like that. You'll have to find what's the best way to address market needs. If that means tying up with somebody, you need to. If that means you expand your capabilities to them, you need to. So it's a bit of both. It's a bit of balancing act that we all need to do.
Yeah. I think, as as you highlighted, it's a mandatory competition, maybe, that you both complement each other.
No, don't use the word mandatory.
Okay, Mr. Ravi, how can global card networks stay compliant with local laws without slowing down innovation and not affecting the business efficiency?
So I think the core principles of regulation remain consistent across the world, right? There is a few aspects that the regulators always looking for. Either the basis the state of economy and the state of the country and the needs. There's either a financial inclusion angle that is being driven, or there is an interoperability and access issue that the regulator is solving for, or there's a safety, security, and enhancement of the entire ecosystem that is being driven. So most regulations would fall in either of these places, and each country bases what their need is. They would be at a point in time pivoting higher on one aspect versus the other. So as global networks, our job is to actually collate, and we global networks operate in over 200 countries, and then there are these regulations that are very nuanced in every of these markets. All we're trying to do is try and capture what's happening across and what are the key themes, while staying compliant in every market is non-negotiable, right? I think that's bare minimum given. That's the right to play in those markets, and we will have to do everything required to make that happen. But also, what do you do to preempt stuff, right? Like we're talking about tokenization in India. We've done it in the last 2 to 3 years in terms of scaling. But the reason India has managed to scale tokenization at the scale that we've done is because potentially the card networks saw this coming many years back. The card networks have built it. They've built it in such a way that the standards were also consistent. And it just became easier when the regulation in India came. And Ramki can add here, right? It took us like 15, 20 days to for the industry to align and get started. So, but it actually took 5-7 years of global standards being set, EMVCo standards being set on these technologies, and those standards actually make implementations faster and it actually accelerates compliance.
That's right.
Yeah.
Okay, I think, you have gained a lot of experience working in different countries in terms of regulation, so that really, I think, give advantage and accelerate market penetration for every country. Mr. Romain, open banking and real-time payments are expanding rapidly. Should card networks integrate, compete, or coexist with these payments to create a more unified payment experience?
I think it's an interesting question, especially in this part of the world where I think payments started quite a lot with QR in Asia, and the card predominance is not the same as where you've heard with my beautiful accent I'm from in Europe. But basically, I think if we step back a little bit, card is actually a media, it's a technology. EMV is a technology. It's not necessarily a payment rails. There is the card rails and there is the card front end. And then you have the alternative payment rails, open banking, instant payment, wallet or closed loop wallet. And I think if we step back a little bit, one of the potential biggest opportunity for cards in the coming years is to separate the technology from the rails. Basically, to make it clear, is something that exists already in India from my understanding, which is to have a card-initiated transaction going on UPI, for example. Those type of things are starting to happen more and more in the world, which is to use cards, NFC, as a front-end technology to initiate a transaction on a terminal. But then in the back end, the transaction is not going to an international card rails, it's not going necessarily to a domestic card rails, it's going to a closed-loop wallet, it's going to an instant payment rails. Those are things that are happening right now. Like we've had implementation of this in Europe, POCs in Asia already on those topics. And I think this is probably one of the biggest opportunity for cards in the future. Because if you think about cards versus QR, card is fast, card is secure, card is standardized with EMV co-standard. Visa and Mastercard have done an amazing job at making sure it's used in transit across many regulations, which is extremely hard with QR. And there's a topic we haven't covered, which is potentially quantum threat in the future and things like this with the quantum computer coming. Card is also potentially ready for this type of attack with dedicated encryption in the future. So I think my answer is I think we should collaborate and we should probably initiate card transaction on as many rails as possible in the future.
Okay, Mr. Ramki, as fintechs and super apps gain dominance in payments, how can card networks evolve from being a back-end utility to becoming a value-driven partner in customer engagement and loyalty?
Yeah, so Fadi, I'll first slightly disagree with your question. I don't think card networks are back-end. So I'll say that and keep that on record. I think your point is how do we partner and collaborate and power the fintech and super app or whatever form factor that you're talking about. I think to me, a couple of things, networks typically, and I can understand why you're calling the utility function, networks typically are not a consumer-facing entity, right? They're more facing banks and institutions as opposed to clients, retail clients. So our job, in that way is actually have to probably get us make us think more and more like what banks would think in terms of being closer to the consumer. I think the first thing that I would say is we need to get ahead of ourselves. We need to get ahead of how we've traditionally operated in the past and maybe get closer to the consumer. Think about what the consumer's needs and wants and how can you satisfy them. So, let's say if a fintech comes and says, I want to build a cohort of most engaged consumers, then as a network, I need to think, how do I build engagement further? So I need to think beyond my core network capabilities, but still build something together. So, one of the things that a lot of fintechs tell is tap and pay is a great way to engage consumers, right? So, and there's a lot of data to show that once you start tapping and paying either with your phone or with your card, there is that flywheel effect that kicks in, that makes you more and more engaged. So if you think of how you're solving for your client's problem, which is our client's needs, which is getting greater engagement, then you start thinking like them, thinking how can I partner better. I think so finding ways and means to understand what your end consumer wants and be the delivery partner to deliver that is one thing. I think the second thing on the super app or fintech point will be that networks in many markets are also regulated entities. And hence, while fintechs may not be directly regulated, I think there is a fiduciary responsibility that networks play in the market where we make sure that we work with those fintechs to ensure they stay on the right side of compliance and not cross it ever. So yes, we are not a bank, and hence, traditionally compliance may be slightly different for us, but increasingly payments also has a lot of compliance. If you do cross-border payments and remittances, I can tell you there's a lot of compliance in that. And hence, our role is when we work with our fintechs to make sure that we keep them on this side of the fence, which basically means be always compliant, give them the tools and the capabilities to stay compliant without necessarily increasing their cost of compliance. So those are the two roles that I can think of. One is get closer to the consumer, and B, help the entities be on the right side of the equation with the regulators. I think I can talk of those two things.
Yeah, I'm sure from your experience you can add great value to those fintechs. Mr. Ravi, tokenization and digital identity are transforming security standards. Could a universal digital ID layer replace the need for traditional card credentials in the future from your perspective?
So if I were to take a step back, right, identity is, at least from a payments perspective, is on two fronts. One, what is your payment credential, if we were to ask, and those payment credentials in our world is the 16-digit number and the additional parameters around it, right? Now, we've always delivered that a 16-digit in a particular way. It came in physical cards, now it comes in virtual cards, tomorrow it can come in various different formats. And the second side of the story is how validating if you really you are the right person possessing that credential, right? And there's a bunch of things that we've done on authentication to validate that. In India, predominantly OTP is one that is used for offline transactions. There's a PIN that is being used. So between these two, there is going to be a change in how these credentials are delivered, both on the payment credential and also on the identity. And tokenization would be a underlying anonymization of these identities, which will, let's say, be the building block. But from a consumer perspective, how will it be delivered will continue to evolve, and a couple of potential near-term examples that you should look at is maybe in the next 1 to 2 years, you would see that you would get a single credential issued by your bank, and that credential could be a number or could not be a number, but at the back end, it's obviously tokens, and how we manage it is a back end story. But it's one credential from your bank that can be used for various purposes. It could be for your wealth management, it could be for your payments, it could be for anything else. And your identity validation would also move away from these numbers and OTPs to biometric and other stuff, which is more intuitive for customer. And the way we secure all of this ecosystem when you're able to do these new use cases is to tokenize and use cryptograms and a bunch of things to ensure that nothing is actually lost. And easier and newer technologies should also have an obligation to be fully secure, and that's how we will ensure with tokenization it works.
Interesting. Quick one now. Mr. Romain, what's your?
Because I see the big times up, so I'll make it very quickly. I think the dream is one tap to rule them all. Payment token, loyalty, identity, everything in a single authentication. I think this is hopefully where we are going.
Okay, great. Thanks for your participation and sharing this insightful information. Thanks everyone for attending this session, and sorry if we take like 2 minutes more. Thank you.
Thank you.
Thank you so much.